What's going on, everyone? Matthew GS here. In today's video, I'm going to show you what gaps are in the markets, why they appear, and if you can trade them. So let me go ahead and share my screen. And the first example I want to show you is actually on Bitcoin against the US dollar. Now, I didn't actually think that gaps appeared on the cryptocurrencies, and I'll tell you why. When the market reaches the weekend, normally the candles stop printing, and that is mainly for Forex. That's where I first learned about gaps. And the reason why the market stops, obviously because it stops trading at the weekend, but actually behind the scenes during the weekend, the candles are actually still printing, even though it's not showing you on the charts, they are actually still moving up and down over the weekend. And then what happens is when the market resumes on the Monday, that's where you see price gaps. That's how price gaps appear. Now, not all brokers show you price gaps. Some actually have them closed. Some brokers have them opened. So just be wary that not all brokers are going to show the gaps. But when they do, these gaps need to be filled, right? It's like a magnet. So it was quite interesting to see a Bitcoin gap because with cryptocurrency, it is actually 7 days a week. So something must happen over the weekend that have these gaps anyway that appears, which is a good thing because you can actually trade these gaps if you are aware of them. So if I just grab this text box here and I'll zoom in, so we're in the 1 hour time frame, and just get this spot on. So as you can see, there's a clear gap here. Just zoom right in. Can you see from this wick here to this wick here, there was no wicks and there's no candles, right, in this gap here. So if you just draw that out, the market needs to, at some point, fill this gap in, right? But when it reaches this gap, it could do one of two things. It could just keep going down, or it could fill that gap and then reverse. So we've got the gap highlighted there. And if we scroll along, can you see how price has been bearish, 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 filled in this price gap, and then immediately took off from it, right? And now it looks like we're going to go on a bullish run, all from just filling in this price gap here. Okay, and I'll show you kind of how you can trade it. When price reaches this area, you don't just want to buy straight away. You want to see if you get a reaction that pulls away. And I will show you in other videos of how to trade this, but this lesson is just on the price gaps. So I did have a little browse earlier, and it happens quite a lot, not on all the pairs, but there was one that I see on the indices, the DE30, that's the German 30. And let's just zoom in here. This one is clear as day. So if we do from that to that, can you see how there's a price gap? This wick come right down, filled in this price gap, and then it took off, right? And then you've got a price gap here as well, from there to there. Price went up, and then it's tanked down and it's filled in that price gap. So that is price gaps. They are like, just think of it like a magnet in the market. Price needs to come and fill those gaps in at some point. When it fills it in, no one knows, but eventually it will fill it in. So you can set alerts on these price gaps, and you can trade them as and when they get filled. But they normally happen with Forex. So I don't know, because it is Monday, it's a bank holiday. I haven't really looked over the Forex pairs to see if there is a price gap that has occurred. Let's just have a quick flick through. It'd probably be more visible on the smaller time frames. Just drop down to a 15-minute. USD. So like I mentioned, they don't always happen, and different brokers. So look, this is a price gap here. From there to there. See that it closed here in the 15-minute time frame, and then it immediately started pushing up because it wanted to fill in this price gap, and it's actually kept on going higher, that one. So the thing, it's hard to back test price gaps because after a certain while, after a few days, what happens is these gaps that are shown, they will then show a candle that's been formed in there. There'll be a candle that prints in there. So you can't really back test gaps in the markets because, like I mentioned, they do eventually, they put candles in there. So it's a bit annoying, but the best time to look for price gaps is the start of a brand new week. Mark up your zones, and yeah, just wait for the market to reach those areas and see what it's going to do. And there's definitely opportunities to trade those gaps, and that Bitcoin example was a really, really good one. So I hope this video helps with price gaps. I'm going to be sharing a lot more videos soon of everything that I've learned on my trading journey and give it to all you guys for nothing. So appreciate that. Please subscribe, and I'll see you in the next video.